Hi there, welcome back and thanks so much for staying tuned to Market Fatafat. You're still watching ET Now with us. Let's keep it going with all the big buzzers, and NTPC Green Energy is the one that's in spotlight today on the back of a positive news flow that the company has informed the street that it has commissioned the first part capacity of a 55 megawatt part out of the 105 megawatt Shahjahanpur solar project, which is in Shahjahanpur in Madhya Pradesh. Now the project is of NTPC Renewable Energy, which is a wholly owned subsidiary of NTPC Green Energy. And also in a separate filing, the NTPC stated that with this, the total installed and commercial capacity of the NTPC group has now become 76,530.68 megawatt. So positive news flow coming in, capacity addition coming in for their Madhya Pradesh plant, and on the back of that, the stock is in fact flying away today, 4.5% higher is where the stock is as we speak.
All right, NTPC Green, the new kid on the block, is flying away in trade today with gains of 4.4%. BEML is the next stock that is in focus today on the back of the fact that it has secured a contract from Chennai Metro Rail Limited for design, manufacture, supply, testing, commission and maintenance. And this contract is for 15 years of standard gauge metro rolling stock valued at approximately 2,500 crores. That's the value of the contract. And on the back of that, BEML is in focus today, currently trading with gains of the highest point of the day, but currently trading with gains of 2%.
Okay, so that's BEML also holding up pretty smartly in today's trade. And on that note, let's welcome our second technical expert on the show today. Dhwani Patel, founder at Finversify, joins us. Dhwani, hi, thanks so much for joining us and taking the time out to speak to us at ET Now. Let's get started with your stocks then. The first one you've picked out for us is SBI Life, and throughout the board, 1 month, 6 months, YTD, annually, the stock has only given negative returns. In fact, today also the stock is deeply under pressure with cuts of more than 5% coming in. Tell us if the bad days for the stock is this all in the past now? Are the good times coming ahead, or can we expect some more consolidation before things reverse for the better?
Absolutely. So talking about SBI Life, first over here, the stock definitely has shown a good amount of correction from the highs over here. But on the weekly charts, things get interesting because where we are trading right now is near its weekly support of 1380. So from current levels, any fall that you're getting towards the 1380 levels, that's the time to start accumulating this particular counter, because weeklies is where this stock is going to take a support around the same levels, and on the lower side the stop loss for same is going to come at 1295. So 1380, 1295 is where you keep your stop loss, and from there the stock should see the bounce coming back again in action.
All right, moving on from SBI Life to Nazar Tech. Nazar Tech is also flying high in trade today. In fact, it is in an uptrend since morning. It has been soaring. In fact, it gained 1% and now it's up almost 3.3% in trade. Gaurav, tell us what's the news flow that's powering the stock?
Well, yes. Nazar Tech, the online gaming company, has raised around 855 crore rupees. Now, company has allotted 89 lakh shares under the preferential issue to raise this amount, and the fund raised were at a rate of 954 rupees per share, which is actually lower than what we are seeing on the screen right now. What is interesting about this stock is that we saw a marquee investor actually participating in this fundraise. So we have got SBI Innovative Opportunity Fund, who was the biggest buyer, but apart from that we have got some interesting names like Siddharth Sacheti, Mithun Sacheti, who are promoters of Carrot Lane, and at the same time we also saw Cohesive MK Beast Idea Trust, which is actually backed by Mr. Madhu Kela, actually investing in this fundraise. And as a result, when we are talking about the company also, it is soaring up in trade today. It is up 3.5% almost. So definitely watching out of this company, given that a promising investors have actually participated in this fundraise.
Okay, so Nazar Tech can focus on the back of its fundraise, 3.3% higher is where the stock is as we speak. Let's talk about a stock that's, been under slight pressure since morning. Let's see what the stock is up to right now, and that's Godrej Properties, and continues to be under pressure, but seems to have improved slightly in the last few minutes because it's only down 0.6% as we speak. And this is on the back of their fundraising plans via QIP. Now, yesterday they had announced that they'll be launching a 4,000 crore QIP. They have already upsized that QIP to 6,000 crores. The company has launched its QIP to raise up to 6,000 crores by selling equity shares to investors, supporting its growth plans. Now, remember last month the company's board approved the issuance of securities to raise the same amount, and in the regulatory filing, Godrej Properties announced that the QIP placement committee had authorized the issue to open on 27 November, which is yesterday. The committee also set the floor price for QIP at 2727.44 rupees per equity share, And along with the launch of the QIP, the company has also announced that it has acquired a 53-acre land parcel in Joka, which is in Kolkata, and the proposed project is estimated to have a development potential of 1.3 million square feet of saleable area, comprising primarily of residential plotted development with an estimated revenue potential of nearly 500 crores. So, fundraising plans as well as a new property acquisition is what is keeping Godrej Properties in focus today.
All right, that's Godrej Properties in focus today. But let's move on to a PSU name. Concor is what you've picked out for us. Dhwani, tell us, this one has been in a corrective phase for the last 6 months, but last 1 month it is seeing a fair bit of a pickup. Tell us from here on, do we see good days ahead for Concor?
Yes, absolutely. On the daily charts, what we are observing over here technically is that the stock has given a positive divergence with the RSI over here, and the bottom has been made around 770 levels, and from there we are soaring high up in trade in this counter. From current levels, given a buy on the higher side, the target expected for the same is going to be of 870 on short-term basis, and a stop loss for the same has to be maintained on the lower side at 810 levels.
All right, moving on from Concor to Paytm, that is in focus today on the back of a brokerage note by UBS that's maintaining a neutral. But they've hiked the target price to 1,000 rupees from 490 earlier on, and you can see the impact coming on the stock price. It's trading with gains of more than 2.5% right now. Now, the next leg of business improvement has to be driven by revenue, as a large part of its cost optimization has already occurred, according to UBS. They expect FY26 revenue to be at FY24 levels, and the adjusted EBITDA break even is likely as of Q4 of FY25. That's the word coming in by UBS on Paytm. And on the back of this positive brokerage note, Paytm is up and away 2.6% in trade.
Okay, so that's Paytm that's been in focus on the back of a good UBS note coming in, very bullish and 2.7% higher. But let's understand if Paytm has gone back to the levels that spell trouble for the stock. Is it entirely out of the water, and where is the business headed from here? Let's go across and listen into Nikunj Dalmia's take on what's in store for the company going ahead.
There was value in Paytm at 400. Now I think Paytm has gone back to pretty much levels of where the entire trouble started. So if you just map the 1 year chart of Paytm, and I think the problem started exactly a year ago, just after budget, right?
I think it was Jan-Feb this year.
Just after budget.
Yeah.
Just after budget. So let's say you look at Paytm from beginning of this year, and from beginning of this year, Paytm has actually given you positive returns. And from the level from where the entire RBI regulatory trouble started, Paytm is actually trading higher. So this entire event adjustment for Paytm, which is that they will run into rough weather, they were on the wrong side of the regulator, they would have problems in terms of keeping their business model alive. I think that adjustment is behind us, and markets and the stock prices have actually gone way above that. So it is a clear indication that right now the event risk value which got created in Paytm as a stock, I think is over. A 300 rupee stock has become a 900 rupee stock. Now you got to analyze is that where is the business headed? And the business will grow at an organic rate. And the business in a sense will grow with some minor assumption in terms of changes at the rate at which it was projected to, let's say, grow in FY24. FY25 will be bad, and FY26 is when they get it back. So if you work on the numbers for FY26 and FY27, looking at the current market cap, the projections what a lot of brokerages have, I think the stock is fairly valued. It may qualify as a stock you want to buy on bad declines, but it will certainly not qualify as a stock which was like a great contra buy where you were buying the fear, because the intensity in the entire fintech and the consumer tech space, I think, is changing. While Paytm has managed to resolve a lot of issues, the problem I think is that the business per se is not growing at the rate that it was growing because of competition and because of what the regulatory new rules are.
All right, with that, it's time for a quick breather, but after the break, we're getting you lots more buzzers, so stay tuned. Welcome back. You're tuning into Market Fatafat, where we're taking you through all the top buzzers in trade today. and why they are buzzing in trade. Gaurav, you've picked out a buzzer, Canara Bank. In fact, the entire PSU banking pack has been in focus for the last few sessions. There's a reversal that we are seeing in the PSU pack. Tell us, Canara Bank, why is this in focus? It is trading with gains of almost 1%, has given up those morning gains, but nonetheless, what's the news flow here?
Canara Bank is in focus today, and the reason being that the bank has now got a permission from the government authority to divest the shareholding of Canara Bank through listing, by the way of IPO. So what they're going to do is that they're going to divest around 13% stake in Canara Robeco Asset Management Company and around 14.5% stake in Canara HSBC Life Insurance Company via IPO. The company, let's not forget that Canara Bank currently holds around 51% stake in each of the companies, and the government authorities has also said that the provision of the subsection 2 shall not be applicable for Canara Bank for holding the amount exceeding 30% of the paid up capital equity in both the entities till 31st October 2029. So a green signal is what we are getting to be seen in Canara Bank from the government, and as a result we are seeing some kind of uptick coming up in this stock, still holding at a gains with the gains of around 1%. So definitely watching out on what happens in Canara Banks in coming days.
So that stock is up almost 1% in trade. Dhwani, let's keep it going with the entire banking and financial space. You've picked out Kotak Bank for us on the charts. This one has been a steady mover, but it's not done much over the last 6 months or even on a 1-year basis. However, the quarter 2 earnings seem to be pretty good. So tell us what the outlook is on the technicals, and fundamentally the stock is doing well, but technically tell us what are you spotting?
Technically, on the short-term basis, Kotak Bank is facing a resistance over here around 1780 to 1790 odd levels, and from there we are seeing that selling pressure is coming in this particular counter. So it's a short-term based sell recommendation coming in on Kotak Bank from the current levels. On the lower side, the target of 1685 is what one must watch out for, and on the higher side, the stop loss has to be kept at 1790 levels.
All right, moving on from Kotak Mahindra Bank to the sectors that are likely to outperform, and there's the financials and the pharma, and that is according to Vikas Khemani, who's the founder of Carnelian Asset Management. And let's listen into what else he had to say about the sectors that he is betting big on.
We are quite positive on the banking space. We think this last 6 to 8 months, banking as a sector probably has not done so well compared to broader market. So that can do very well. Pharma can do very well. CDMO space can do very well. To some sort of consumption name will do well. So again, you got to look at but broader category wise, I think financial and pharma is something I would say broadly should outperform broader markets. Even we are quite positive in the IT space as well, where we are we hold quite a bit of position.
Okay, well, that's a word coming in from Vikas Khemani, but let's talk about SpiceJet, because this stock has also been in focus and it's been one of the high flyers since morning. But it's actually given up all those gains, because last I saw the stock was up 3%, has simmered down quite significantly, and it's still trading with gains of 1% nonetheless. Now, shares of SpiceJet rose as high as 3% today after Ireland-based aircraft lessor Air Castle withdrew its insolvency case against the low-cost carrier before the NCLT, and this followed a mutually agreed upon settlement, marking a positive turn in the airline's effort to rebuild and strengthen with its partners, is what SpiceJet has said in an exchange filing. Remember, last month SpiceJet resolved a $23.4 million dispute with Air Castle and Dublin-based Wilmington Trust SP Services. The settlement was finalized for a total of $5 million, along with an agreement on the handling of specific aircraft engines. So that's a steep discount on that settlement. Both parties chose amicable negotiations, effectively sidestepping lengthy courtroom battles, and as part of the settlement, all the ongoing litigations and dispute between SpiceJet and the involved parties have been withdrawn from the prospective forums. So very positive news flow coming in for SpiceJet, but nonetheless the stock seems to have simmered down, still trading with gains of 1%.
All right, that's SpiceJet on the back of news flow. But Dhwani, Apollo Hospital is what you picked out on the charts for us. Last 1 month of consolidation coming in on this chart. Tell us where does this go from here on?
So overall, the market is in a caution mode right now, and on Apollo Hospital as well, we are seeing that the caution is there, and in today's session, the stock is breaking below its important EMAs, and we've also seen a top formation coming in on the daily structure at 7,480 odd levels. From there, we are seeing profit taking coming in. This would go on further on the negative side, and from current levels for the short trade, the target is of 6,600, and the stop loss that one needs to maintain on the higher side is going to be of 7,030.
Okay, so that's the outlook coming in on Apollo Hospitals. Gaurav, you've picked out an entire basket of stocks for us. It's the IT stocks. Now remember, IT is one of the biggest losers in today's trade and was trading with cuts of more than 2% when we started the show. Tell us what's the reason why you've picked out this entire basket of stocks.
When we talk about IT stocks, specifically when we talk about Nifty IT, that is actually bleeding today. And when we look at some of the counters like Coforge, LTTS, Wipro, Infosys, if you can pick any of the stocks, all the stocks are turning in red today. And the reason being that when we talk about Nifty also, we are actually exerting some kind of pressure. So we have got Tech Mahindra, HCL, Infosys actually among the top 5 losers in Nifty 50. And why is this? Is that when we talk about the overnight data from US has come up with their inflation data, and that is showing some kind of consumer spending which has increased slightly more than what the people were anticipating for the month of October. Now what it resonates is that it can actually result in the slowdown in the Fed rate cuts that were expecting, and any kind of slowdown in the US rate cuts will directly affect the client spending, and at the same time they will also affect the sectors including Indian IT sector, which is actually having a significant share in revenue from the country. So what we are seeing right now is the impact of what the CPI data has come from the US and the reaction from investors in terms of the Indian IT and the impact on the Indian IT companies. Let's not forget that for the last few days we have already seen Indian IT, actually Nifty IT, gaining in trade, but today it is a day where they are actually losing. So definitely watching out on what happens in these counters given that US CPI data has come, and let's see how the expectation pan out for investors in coming days.
All right. That's a lowdown on the IT pack, which has been doing pretty well, a reversal that we were seeing. Today it's not doing well, of course, on the back of the US CPI data that has come out. But Dhwani, coming to you then, granules you've picked out for us. It has done decently well. In fact, it's done quite well for itself in the last 1 month also, last 6 months also, good returns of 33%. Do you see the positive momentum to continue for this?
Yes, this one is a buy recommendation coming on granules. The weekly chart structure for this one gets interesting at this point in time because the stock has been hovering around its 20 period exponential moving average on the weekly charts, and from there we are seeing momentum being picked up, and in this week also we are seeing the momentum working on the bullish side with volume increments. So buy recommendation on granules comes ahead of this, and for the target for the same is at 690 on the higher side, and the stop loss that one needs to maintain over here on the lower side is going to be of 520.
Okay, so those are the levels to watch out for on granules. On that note, Dhwani, we'll let you go. So thank you, Dhwani and Gaurav, for joining us. But we'll take you now to an ET Now exclusive on the aviation space. According to sources, ET Now has come to know that the Ministry of Civil Aviation held a key meet on rising airfare during peak demand season. Though the ministry doesn't want to regulate fares, it has advised airlines to avoid taking undue advantage of demand during the peak season. My colleague Samir Dikshit is here with more details on that. Samir.
The Union Civil Aviation Ministry held an important review meeting on the issue of airfares this week. Sources have informed that the airfares on the domestic as well as on the international route that was reviewed, and especially focusing during the festive season period, that is starting with Onam until Chhat Puja, which is an important festival in North India, whereas Onam is one of the important festivals in South India. And it was observed by the ministry officials that the international route, majorly this southern South India based sectors which connect to the Gulf countries, these routes observed a spike in airfares majorly in the business class segment, and also when it comes to the domestic routes, then the important routes like Delhi Mumbai, Mumbai Chennai or Delhi Goa, these routes observed a spike in airfares. So the trend was reviewed by the ministry, but official sources have informed that as of now the government has no intent to regulate the airfares, but they are going to have a strong check, keep a strong eye on the airfares, and they are also looking to come up with certain steps to keep check and balance when it comes to the airfare aspect. It is also important to note that the review meeting on airfares is held at a time when the winter session of the parliament has just begun, and if you correctly remember, last parliamentary session the opposition raised the question of airfares, and the minister, the aviation minister Ram Mohan Naidu, had to answer, and then there was a bit of criticism of the government that they were unable to control the airfares. So this time the government has taken the review meeting, and they are looking to actually advised the key stakeholders that they do not take the undue advantage of the situation like the festive period, and they keep up check and balance when it comes to airfares.
All right, with that, it's curtains down on this edition of Market Fatafat. Snehi and I will take your leave. Thank you so much for tuning in, but don't go anywhere because closing trades is taking the action forward.
If you like this video, then like, share and subscribe to ET Now.